I wanted to make this video to clarify a lot of questions I had as a digital nomad moving offshore. I've watched every video I could possibly find on the foreign earned income exclusion, which is basically a US tax provision that allows you to not pay any taxes on personal income under $129,000 annually. So they increase that amount every year to adjust for inflation. And if you're self-employed, that's a deduction of $147,000. But for the longest time, I felt like there was important information missing, stuff that the tax strategists weren't explaining well, and as a US citizen, I really didn't want to get it wrong on my taxes. But finally, I found the right information on the IRS.gov site. Just as a disclaimer, I'm not a tax expert, nor am I an accountant or attorney. And since y'all are swimming in cash, you should definitely hire a team of specialized tax experts, accountants, and top-notch attorneys to give you the information instead of watching my videos. But since you're here, I will tell you that the best information you can ever receive can be found on my favorite website, irs.gov. There are no secrets when it comes to how to save your hard-earned money from taxes. The US government practically spells out all the secrets for you in easy-to-read fonts. So I'm going to try to answer all your questions regarding the foreign earned income exclusion. But if you have any questions on it, let me know and I'll make another video with more answers. How do I qualify for the foreign earned income exclusion? In order to qualify for the foreign earned income exclusion, you need to be making less than $129,000 every year, adjusted for inflation, and meet one of the following two requirements. Either pass the physical presence test, in which you add up all the days out of the year in which you were in the United States, and then add up all the days in which you were in another country, and if 330 of those days were spent in another country, then you pass the test. According to the IRS, full day spent in another country means that no part of that day was spent traveling to or from the US and its territories, or onto a traveling vessel that you spent more than 24 consecutive hours on, such as a cruise ship or a spaceship. So, cruising in international skies or waters or being in a US territory like Puerto Rico does not count as being in another country. Each day that contains any travel to those places is a day lost on your physical presence test. The second option is to pass the bona fide residence test, which means that you're a US citizen that is a tax resident of another country that has a treaty with the US. And depending on how much taxes you're paying to that country, you might be able to deduct some or all of it from your US taxes. This list of countries that have treaties with the US is long, and I was honestly actually surprised to see Venezuela and Russia on that list too. Does the US government know that I'm not in the country, or do I have to let them know? You have to claim the foreign earned income exclusion every year if you wanted to apply on Form 2555 of your personal income taxes. There might be other forms that you have to include, such as foreign bank or asset reporting, but as far as your income tax goes, it will work just like any other time you do your taxes. I use TurboTax personally, so usually they sort of guide you with the questions like, are you living in another country this year or whatever? And you'll want to be always truthful and include the documentation the same way that you would if you were writing off any expenses on your self-employment taxes or whatever. Include hard proof that you were in another country, maybe through passport stamps or flight tickets. Add it all up and record it on Form 2555. What if I'm self-employed? If you're self-employed, you'd basically do everything a self-employed person doing their taxes in the US would do, except you get to write off a little bit more than the person receiving a W-2 because your self-employment taxes are higher. Nonetheless, I'd actually encourage you, if you're self-employed and you don't have any employees, to file as an S corporation in a state that doesn't have corporate or franchise taxes, such as Wyoming, because as a pass-through entity with no employees, you essentially just have to give the IRS one annual report and pay zero taxes at the corporate level, and then pay yourself a salary, which you will then report on your personal income taxes and write off on the FEIE. So one tax filing plus one annual report, but it can reduce both your taxes and liability by a lot. If I have federal student loans, are they exempted if I'm living in a foreign country? The answer to that is yes. Since your federal student loans trigger repayment schedules from the U.S. Department of Education that are based on your IRS tax returns, and the FEIE is an exemption that potentially reduces or even eliminates your taxable income, then living in a foreign country can be a viable way to pay a monthly amount of zero on your federal student loans while in repayment, and And in the United States, federal student loans are typically forgiven after 10 to 20 years of being in repayment. So theoretically, you can move out of the country, stay out for 10 to 20 years, make less than the FEIE exemption amount, and not pay a penny in student loan repayment. If I'm getting paid by a US company and the money is going into a US bank account, is this income still deductible under the FEIE? The short answer is yes, as long as you pass the physical presence test or the bona fide residence test. And as a bonus, I'm going to quote the IRS. If you performed the services to earn the salary outside the United States, your salary is considered earned abroad. It does not matter that you are paid by a US employer or that your salary is deposited in a US bank account in the United States. The source of salary, wages, commissions, and other personal services income is the place where you perform the services. For the purposes of the foreign earned income exclusion and the foreign housing exclusion or deduction, any territory under the sovereignty of a country other than the United States is a foreign country. U.S. territories are not treated as foreign countries. The source of earned income is a place where the work or personal services that produce the income are performed. In other words, income received for work in a foreign country has its source in that country. The foreign earned income exclusion and the foreign housing exclusion or deduction are limited to earned income from sources within foreign countries. Getting paid as a U.S. military or a civilian employee of the U.S. government can't count as foreign earned income, by the way. So depending on which government agency you work for, you might want to ask them to pay you through an LLC or S corporation, which can be an umbrella business for the work that you do offshore, which you will then pay yourself a salary out of as a foreign resident employee of your own company. That was a huge relief for me to learn because all the tax strategists that I was reading online were telling me that I needed to move my entire business offshore to save money under the FEIE, either by working for an offshore company or myself creating an offshore company and setting up an offshore bank account. And to me, that really seemed daunting as someone who was self-employed because, as anybody who's done offshore companies will tell you, it can get really expensive and complicated to set up an offshore business. It's actually really cheap and easy to set up a US corporation and bank account compared to literally any other country, including the so-called tax havens. The cheapest option I was able to find for incorporation was UAE, and they're still pretty expensive compared to the US. Plus, as a US citizen, it's going to be really hard to get a UAE bank account unless you have a lot of upfront capital to deposit, which most of our house hackers won't. So there it is. If you're working for a US company, simply ask your boss if you can work remotely and stay in a foreign country for more than 330 days of the year. If you're working for yourself, remember, you can file an S corporation in a state with minimal taxes, fees, and licensing requirements, an online bank account such as Mercury or Chime, issue yourself a W-2 with a salary under the FEIE limit, and stay in a foreign country for more than 330 days of the year. I've noticed that some people who claim FEIE won't even step foot in the US, not even on a flight layover, because they're so scared that they might get stuck in the country and lose their FEIE status. If there is anything else you want to know about this that I didn't answer in this video, or that you think I need to learn more about, let me know in the comments and I will gladly look for the answer. In the meantime, I'm going to include IRS Form 2555 below for reference. As a reminder, I am not an attorney or a legal tax expert. I'm just a girl out here who loves learning about freedom and sharing what I learn with others.